if let's say we are looking into MyNews, there are a few things to take note lah. Number one is that, are you comparing MyNews to Family Mart? All right, because I can tell you right now, even for me personally, if I have both Family Mart or MyNews in front of me, I would personally still go to Family Mart. So it is not about comparing which one is superior, because at the moment I have to say that Family Mart is definitely superior. But when it comes to investing, I think I mentioned.
Before we begin the podcast, have you gotten your free ebook? It's called the Build a Six-Figure Portfolio Guidebook. Now, inside it, we share with you the tips and tricks to bring your stock investing skills to the next level. The best part, it's only 10 pages long and it's totally free. Whether you're on Spotify or YouTube, the link to download is in the description, or you can go to www.firl.co/FREE or www.firl.co/free. Hello everyone, welcome back to the FIRL podcast. It's been a while, Rondy. No need to introduce you again.
Hey, thanks, MJ. Happy to be here again.
Yeah. I think this will be the first time you'll be... Okay, you are the only... first of all, I think you're the only guest that come back 3 times. And all 3 times, I just realized you are sitting in a different place.
Oh, yeah, you're right. You're right.
So very, very unique. I don't think anyone will have that privilege, right? So, for repeated guests, usually we just want to get an update, right, on what has been happening in your investments.
When was the last time I was here? Do you remember?
It's almost a year. So you are one of our earliest guests here in this office. That would have been November, like that. November, October, somewhere there.
Yeah, I think October, and then it was at sometime in November or something, right?
Correct. So you are looking at 10 months ago, give or take. Right.
10, 11 months, yeah.
Yeah. So anyway,
Time
let's
flies,
go.
Man.
Yeah, man. Like, let's go right into it, because certainly the mood 10 months ago and the mood now, quite different.
Yeah.
Quite different.
Yeah.
And maybe just give a sense of how is your 2022 right now in terms of investments, and of course, what are you looking at?
Right, Ken. I think, I was just doing, I think I did like my first half 2022 review,
Yes.
And I posted it in Stockbit, and I was just actually reminiscing about the last time I was here. I remember on our second podcast, I was talking to you and John, and we were like, I was saying, John, 30 years from now, we would look back in like 2020s, right, as an era of, silly money lah.
Yeah.
Like, it was how easy it is to make money, because valuation of this company and that company, it was silly money. I mean,
Valuation didn't matter for that company.
Yeah, we all knew it was silly money. So I think the sad thing is that it was just like 1 or 2 months after that, the downturn started, the collapse.
The beginning, yes.
So I suppose, my 2022, because fact of the matter is, whilst I always advocate for a balanced portfolio, I do always have a bias against growth stock. So I think in my 2022, as I mentioned in my post in Stockbit, I am down. As of first half, I think I was down about 15% or something like that. It's nothing to shout about.
in some ways it is. I mean, a lot of people are down.
And so it basically sort of like wiped out my 2020, almost wiped out my 2021 gain.
Right.
But of course, I would say like in the past July and August, 1.5 months, things had sort of like picked back up. But whether or not it's a bear rally or what,
Bear rally, yeah, it's cool. So speaking of bears, right, what do you actually think about this whole thing? Because I mean, there are things like if you're looking at the economic data, right? I mean, the U curve is inverted already, and there are certain signs of recession. And in one sense, everyone thought 2020 was the recession. Then liquidity got pumped in to prop the market up in various ways, right? And we saw multiple bubbles, right? Whether it's the tech, the crypto bubble and whatnot. And so, do you think that the real recession is here? Because if you don't, let's say if you don't treat 2020's downturn as a recession, we are approximately, if since '08, nearly 14 years bull run.
Yeah, I think that answer, honestly, I'm not an economist by any profession, So whatever that I answer may or may not be accurate. There's a lot more sources online that will be able to tell you better on whether or not we are in inflation. We are, the inflation, the situation of
Sure.
the inflation, the recession, and everything. I think for me, because I sort of manage a small pool of funds,
Right.
some family office funds, I think for me the fact of the matter is just that I feel like in my simple understanding of investment and investing, I think there is a higher probability that the market is gonna continue in the bear run. It's gonna just be worse off than for it to sort of like recover to basically beat another all-time high. So I do think that is, in terms of probability, that is what it is. And therefore, I would say that, even in my portfolio, my personal investment portfolio, I just do not understand why I would give up liquidity at the moment. So in my actively managed portfolio, I'm at the moment about 55 to 60% cash. Yeah, I have been trimming a lot of positions, so I am just on the sideline lah, basically, and I do like basically some short-term trades here and there. And that's the way I've been managing the portfolio so far. But I do want to sort of like highlight, right? Because I've always highlight this either in Stockbit or in some other talks that I have been invited into. I think the narrative of this narrative that was, I think, made famous by Ray Dalio, Ray Dalio, that cash is trash and all that. I think those are dangerous words in my opinion, because that narrative actually lost a lot of people's money, myself included. And I think it is important that every investors really understand the term of, or rather where their financial position is, on whether they are a short-term investor, they are a trader, or long-term investor. I know that FIRL always preaches about long-term investment,
Right.
but for instance, like, what is your definition of long-term investment, MJ?
So typically we would say about minimum a year, but ideally 3 to 5.
Right. Yeah. So I think I agree to that. Like 3 to 5 maybe is a little bit short in my opinion. Maybe I could even be about up to 10 years. But I think what is more important is, if let's say you're terming yourself as a long-term investor and that you are investing to build wealth, right? You also need to understand, like, where is your sources of income. I think long-term investor bodes well if, let's say, you have got a secure and sort of like constant stream of income, be it on a monthly basis, like your full-time job, quarterly basis or yearly basis, I'm not sure. Yeah. And if, let's say, you are like talking about a short-term investment per se, it is probably mostly in line with, I don't know, people managing some small pool of funds, or maybe like you are an elderly that have got like a pool of savings of which is not going to grow anymore, So these are the sort of thing that perhaps you need to consider before deciding what to do with your investment, or before you're categorizing whether cash is trash or not, Because if, let's say, you are no longer working, and basically say you're like 40, 45 years old, and then you decided that you're going to retire early or something, and you have a very good small pool of savings, and you're bringing this into investment, you then really, you don't really have that sort of like, your wealth creation doesn't have that security of like recurring income on a regular basis. So you can't really like do a dollar cost averaging, you can't build your position over time.
Right.
So you really need to look after your cash, But if, let's say, you are somebody that is maybe like yourself, or even like myself, that we have some recurring income on a monthly or quarterly or yearly basis.
Some sort of earning power.
So that is how I would, personally, for me, that's how I'm categorizing my investment. I have Like I think a lot of people like these terms that, you know, short-term investments should be called like itchy hand portfolio, and then the other one is like do not touch portfolio. This sort of, you know, you can categorize it into those manner lah, right? So for me and for my active investments, these are basically my short-term investments. I am very, very bearish, and I am right now at 55% cash. Okay, and just as mentioned earlier, the reason of why that percentage of ratio of cash to equities holding is just because I just feel that there's a higher probability that the market is going to be worse off in the next few months than for it to continue going up lah, basically. And yeah, I am doing some sort of like short-term trading here and there just to sort of like make up the numbers. But the notion of cash is trash is actually perhaps true if, let's say, you are a long-term investor.
Correct.
Yeah.
Correct.
So I think I just need to sort of like get that clear, because I do feel like a lot of Malaysians, a lot of young millennials are a little bit confused on that notion. You know, I don't know if you feel it between your community.
I actually think that many people like to operate in the extremes. So, for example, when you from the investment banking or the trading line, right? And so there's always this distinction. I mean, I'm not from there, but I know that you guys make this distinction between secular, cyclical, and tactical time frames.
Yeah.
So, essentially, as a portfolio manager of your own wealth, you obviously, like you said, you have to know all the goals and the circumstance on that. You have kids, you have kids, things like that. But then also get a sense of what is your secular portfolio, what is your cyclical portfolio, and what is your tactical portfolio. And a lot of these tend to be, well, who you want to be, what type of investor you want to be. But if you are someone that wants to be completely hands-on, then you always have to assess the volatility, or industry term is the implied volatility, right, of whatever asset that you're trying to trade or invest. And so from there you can know lah, right, whether or not now is the time to do trades, now is the time to be more long term. And of course, in your case, obviously now you are expecting higher volatility, and that's why you're going 55-60% cash.
Yeah, for the actively managed portfolio.
Right.
Yeah, I think let's go back to that narrative.
Right.
Talking about the economy. I for me, in my personal opinion, I think it was just about a month or 2 months ago. The Fed chairman Jay Powell basically he did mention, right, like he will tank the economy to beat inflation. And subsequently, we saw like 9%, and then 8% inflation print.
Then there was a 0.2% below expectation, right, of the inflation. Everybody's like, yay.
Yeah, correct. So I don't know. I feel that's a little bit silly lah. Again, I'm a believer that the recent spike is a bear market rally. So I did basically use this sort of my bear market rally to sort of like trade, and therefore I have been like trimming or selling off some positions during this particular bear market rally. I think this year what is pretty interesting is that you can actually trade on the volatility of like the fear and greed.
Correct.
I do have made some decent trades, and mind you, I'm like the worst trader ever. I have been able to make some decent yield and profit from just those trading fear and greed lah. So yeah, I think that's that. But coming back to the inflation print, I mean 8% is still bloody high lah, right?
Yeah.
And I do feel like perhaps maybe in the next couple of months, things are starting to taper a little bit. It's gonna probably hover around 6, 7, maybe 8%, but that's still bloody high, right?
Yeah. Do you think that if it falls, you think someone like Jerome Powell will still continue to, hike rates if it tapers off?
I don't know. I mean, honestly, from the recent Fed meeting, his tone changes a little bit. So I cannot second guess him.
Right.
But I think what I would like to say is that fall is coming, like winter is coming, and I think where we are seeing the oil prices at the moment, the divergence of oil and gas prices. I think the recent oil sort of like sell off is not really so much on supply and demand. It's more on basically the macroeconomic. So you know,
trader speculation, is that what you're saying?
yeah, like it's not really on based on demand and supply, but you know, things can easily swing both sides, right? And I mean, like the world, especially Europe, they really need to pray, you know, that this winter is not so cold, basically. I mean, we are seeing news like Bulgaria telling their people to stop exporting woods, you know. These are like the sort of like extreme scenarios on how people are preparing for winter, right? So I don't know, man, like I just have a very, very I have this feeling that oil price could be higher than whatever is the year the 2022 year high coming into the winter,
right?
In my opinion. I don't know whether you feel the same.
I mean, before that, I mean, why do you think that decoupling, or that, I would say decoupling of oil and gas is important? Because we tend to lump them together, right? But now you're suggesting that the data are showing that no, one can go down without the other going down, vice versa.
Yeah, I think it's just basically a reversion to mean, and basically understanding about commodities, demand and supply, and stuff lah. Yeah, but again, I do have this particular view of that. You know, I think oil price is gonna shoot up again. And you know, when oil price is gonna shoot up again, then are you gonna stay? I mean, is inflation gonna stay again at 7-8%? You know, so
unless all of us start using electric cars, maybe it won't be so bad, right?
Yeah, I do have a question though, right? Like, do you think this Ukraine and Russia war is gonna be a forever war?
That all depends on. Actually, I've always thought that everything depended on NATO in this equation. The reason Russia has decided to invade, in a way, Ukraine is because of, in their assessment, NATO's encroachment. And in a way, you can't really fault that. Let's put it in a Malaysian context, right? Imagine if, I don't know, let's say China, you know, started invading, or rather started having strong military ties, like a NATO-like tie with Thailand or with Kalimantan or Indonesia, right? As a Malaysian, obviously, you know, you won't be so comfortable, right? Unless you are also included in that military alliance. So I think that's the scenario that Russia is facing. And they have this demographic decline that is just so, it's quite tragic, to be fair. And so when you take all this into account, you know, rogue nations usually don't invade people because they are strong, but usually because they are weak, right? If you look at Nazi Germany, they invaded because for the longest time they had all the unfair deals pit against them. In Japan, they invaded this part of the world was because, you know, the US cut off the oil supply and things like that. So that would be my, you know, benchmarks to look at how NATO deals with this issue. But if they get the President Zelensky on that to be on NATO's side, then I think it will escalate lah.
Yeah, so like, you know, I asked that question again because it sort of helps to build up the narrative that, you know, there's a higher probability that things are just gonna be worse off tomorrow than as compared to things are gonna be better off lah, you know. And I think adding on to that point, so we have that particular fact of inflation, you know, which is going to be constantly going to be high. Yeah. And, you know, winter is coming and basically oil price is probably going to shoot up, and that's going to basically help to maintain the high inflation numbers. And secondly, that particular Russian and Ukraine war, how long is it going to drag? And we have been talking about just oil just now, but what about all the other commodities, right? So yeah, correct. Wheat especially. Now, thirdly is, you know, I think recently I've been on vacation because, you know, the best
very
thing.
Very nice photos.
Thank you. So like, basically sometimes when market is bad, the best thing is to do nothing lah, basically, right? So I did nothing and I just traveled the world and all that. And some interesting fact is, I was talking to my wife, like, hey, how come it seems like there is no recession, like everybody is spending like crazy and all that. Yeah, do you feel that? Like there is, although we are at the recession risk, but you're not actually seeing it on the front page?
Yeah, I think that's very, very weird. I agree with the on the ground sort of attitudes, but if you look across again the data, right, the sentiment, the consumer sentiments are all like huge downturns.
Yeah, I don't know. I personally,
Yeah.
I personally want to call a bluff on that, because I do realize like sometimes like we don't really realize how much we spend until we actually sit down and analyze, right? So I mean, me and my wife were just analyzing our spending on our vacations and our sort of like monthly living expenses, and we realized that we have definitely overspent as compared to, say, pre-COVID times.
Really interesting.
Yeah, and people don't really realize that they have overspent until they sit down and analyze. I don't know, maybe you can...
But is that a result of, I mean, without prying too much, but is that a result of prices rising or increase in consumption?
I think it's both when it comes to the desire to consume, and at the same time, the increase in prices for sure, so now the fact of the matter is a lot of people probably are having excess savings, right? Or maybe
because 2 years of doing nothing, right?
Yeah, and government has been basically paying them to sit on the couch, sort of incentive, right? All over government, like
especially the developed nations, I would say.
Yeah. Now the thing is, there are a bunch of populations of which you can overspend, but there are a lot more segment of the population that you actually cannot overspend.
And the majority, actually.
It is actually a majority, right? And when these people realizes that they have been overspending for a long time, they will basically cut on their spending naturally, So yeah, I mean, people so far have got a lot of excess savings and money, and basically that is why we are not really seeing that sort of destruction in demand yet. But I feel like it's
temporary.
It will come basically,
Right.
Yeah, so this is going to create earnings pressure in a lot of the segments of the industry, in my opinion. Because everything is intertwined, everything is interrelated. So,
we before this podcast, we wanted to talk a lot about like labor in general, because I think it's linked, right?
Yes.
It's linked in terms of, I mean, your ability to consume is your ability to convert your labor into capital, right?
Yeah, I think the COVID actually created some structural unemployment problem.
Yeah. But so actually I spoke to a good friend, was it Han, I think, about employment, and we also talked about employment in our videos. And there's a lot of comparison today with the 70s, right? Because 70s, there are recession fears plus inflation. We're having the same thing. But the big difference between today and the 70s is the employment. Our employment still looks, I mean, this era's employment. On paper, it looks good. And I think part of that is this whole gig economy. I mean, think about it, right? If I get a job that pays me $1,000, I'm employed, right? Whereas back in the day, presumably your income will be a lot higher if you get a job, but if you don't get a job, then you can't drive Grab.
Yeah, correct. And I personally have this problem because I think but maybe some of the audience don't know. I actually have got my own bread and butter business. It's a small facilities management company in Malaysia, right? So during COVID, it was actually pretty easy for us to hire people because a lot of people are not employed and they want to work, But since the reopening of the economy, it is very, very tough for me to hire even an admin or a salesperson or even like a technician. And I believe this has got a lot to do with what you just mentioned, like the gig economy. I think whatever unemployment numbers, whatever statistics that is being shown in the labor, right? I think there are.
It's misleading, lah.
It's not painting the right picture.
Yeah.
because here we have, a bunch of young people, especially, maybe previously they used to work in the restaurants, they used to work in the factories and all that.
Correct.
And then COVID hits, and they started to work from home, and they started to understand there are other sources of income, be it like becoming a content creator, becoming I don't know, like some OnlyFans content creator or whatever, right?
Patreon, let's use Patreon.
Digital marketer, and then basically now that the economy is opening back up, they do not want to get back to where they were previously.
Yeah.
And what is a problem now then is that we have been hearing multiple companies on multiple analyst briefings and public briefings, right? Labor has always been an issue. Labor shortage. Even until to this day, it's still like a labor shortage. Even companies like myself, we are facing these labor issues. Now, the fact of the matter is that right now, for me to actually employ somebody that is either in sales or a technician or whatever, I need to pay like a premium.
Right.
Maybe like in terms of rating, I would rate this person only 6 out of 10.
Yeah.
But I would have to pay her somebody that is worth 10 out of 10 sort of thing, just for them to say yes. So this is a big trouble right now for a lot of companies, in my opinion, because then it really increases the cost of your goods and services and everything.
I want to ask a follow up on that. So, what do you attribute that to? Is it because it's not necessarily if you do a gig, you earn more money than a corporate job, let's say. But I think one element that gave especially younger people a taste of during the COVID years is the freedom and the flexibility, right, of just working at home and not wanting to go back. Of course, some of them succeeded a lot, but then some did not, but they would rather earn less for the freedom. And so do you think that perhaps that is information for corporations or even SMEs, right, to look at it and say, okay, maybe the promise and the offers that we give needs to be a bit more restructured? Because I know for my parents' generation, they'll be like, as long as it pays more or whatever, they'll take it, right? A job is a job.
Yeah, I mean, bro, like, I think this had sort of like developed even to slightly before pre-COVID situation, nowadays management trainees in an investment bank, it was totally different than when I was a management trainee back in 2008, 2009, right? Like last time, it was practically a requirement for us to stay until midnight, stay until 3 a.m., 4 a.m. to complete our tasks. Right now, everyone is like 5 p.m., 6 p.m., they have to go back. And a lot of emphasis is on like standard of living, work-life balance, all these sort of things. So, I think those are definitely important. I think a lot of, the entire startup world, the new economy sort of like business came in and disrupted the way we work and we live life. So that's one part of the story, but it doesn't change the fact that, I think due to COVID, this had actually accelerated, and it created what I would call like a structural unemployment problem, which actually adds to the cost of capital, it adds to the cost of labor, and it reduces earnings capability of companies.
Yeah, I think a larger trend driving all of this is this whole idea of decentralization. I think young people are really into crypto, so they like this idea of decentralization and essentially is being their own boss. I don't know whether you saw this, that it got pretty big on, I think, in Twitter, one of the social media platforms, and we tend to have this impression, right? People of the past, and when I say the past, I mean back in the days where people were still in the fields, right, as peasants. And when we hear the word peasant, what do we think? Right, we think like essentially it's just one level higher than slave. Right, but then someone, a historian, actually put up the numbers, and he actually tried to analyze what working life is like for a typical medieval peasant, and the numbers he got was quite shocking. So every day he will work about 8 hours, hard work, but right, he will always have 12 weeks of leave because there's winter.
Okay.
So when you think about it, right, you only work 40 hours a week by and large, and you get 12 weeks off. So 12 weeks is 50 days of leave. So if you actually compare them and maybe us today, you know, whether it's a 9 to 5 or maybe you work 50 hours a week, and you have what, 14 days of leave, 21 days of leave. And so it does give me at least, right, a perspective, right, on is it are laborers really feeling like their time, sacrificing their time and money is worth it, especially when you take into context the fact that the global population has been slowing down in terms of growth.
Yeah.
And it's likely to start declining. And so basic demand and supply is that if labor starts to shrink, the price of labor should go up, right? Unless everyone is going to stop demanding goods and services. But these are just like some brief observations, no big conclusion. But I just thought I'd just throw it to you, just because it's pretty interesting facts. Yeah.
So what's the question?
Just a response to your point lah about this labor stuff and all that.
Yeah, I honestly see this problem creeping up in China, especially because China, all this while we have understood them to be an economically productive country.
Very hardworking people.
Yeah, especially in the works of manufacturing and all that.
Absolutely. Yeah.
But I think what has happened recently is that these workers in the factories and all that, right? They started to earn a lot of income and they become like middle class. And after that, they have got all these policies of one-child policy and all this and the likes of those things. And I think the important word is like I think China their population is starting to age out of this sort of work and labor intensive sort of like duties. And it is creating a massive gap lah. And that is why I think we are seeing a lot of Chinese companies are actually venturing out to the likes of Vietnam and Philippines to sort of like create a synthetic form of labor. I think that's one issue of in China that I can see, but I think it's a topic for another day.
Yeah, for sure.
Yeah. So I think again, wrapping up and coming back to our initial discussion, right? So we have an inflation problem. Of which is derived by oil price, which in winter months is just going to go up, and then we have could be a forever Russia and Ukraine war which is going to again exacerbate the price levels of other commodities, and then we have got this entire labor issue which creates a cost spike. And what was the other one? Basically the false sense of there is no recession today because everybody is overspending. The demand destruction is going to happen. So what then happens is, yes, in my opinion, I think the market has already priced in the inflation fear. The market has already priced in the spike of interest rate. So what we have been seeing in 2022, in my opinion, is that the market has actually punished, or rather the market has given like a valuation D-rating on a lot of companies. So we are probably halfway there, but we have not really priced in the risk of recession.
Yeah.
So that's in my opinion what is happening in the market lah.
Okay. So I mean that's the big picture stuff, right? And I'm gonna get into some companies that you're interested in, but before like a specific company, we have to talk about tech, right? Because I mean, even linking to your point about inflation and labor, I mean the price of presumably semiconductors and all the raw material required for that is going to go up. That will affect tech manufacturing companies in Malaysia, and then it's hard to get labor, right? And a lot in Malaysia, there's a lot of our companies, whether OSAT or EMS, they have a lot of labor as well, right? So what are your general thoughts on the tech companies?
Okay, so when it comes to tech,
yes,
I think there needs to be a real distinction here because tech as we know it, if let's say we are talking about it in essence of developed markets like the Nasdaq or even in Hong Kong and all that, these are basically your software companies,
correct.
you know, like
Nvidia, things like
all
that.
this sort of thing, and it even sometimes you know, it wraps around the companies that have got zero profit, right? So basically, what has happened is these companies has gotten punished lah, right? We are seeing some tech companies, be it a biotech company or like software companies, are trading below cash levels these days because, you know, people are wondering how much more cash can you burn, you know? So that has got punished. But in Malaysia, you know, whilst Malaysians and Bursa sort of like term them as tech stocks, but they're actually more like a tech manufacturing stocks.
Correct.
Yeah. And I was just doing this post actually in Stockbit, I think back in May or something. Do you know that, out of the top 25 largest so-called tech stocks in Malaysia, 80% of them are actually net cash company?
You know, I wouldn't be surprised.
Yeah, they're actually net cash companies. So whilst they are termed as tech stocks, but they cannot be, I mean, they're net cash company. They're fundamentally brilliant, you know, like they make a lot of profit and revenue and they are growing. So it's a very, very different sort of like business model. You know, these are tech manufacturing, and it is not like the tech stocks that a lot of people would associate with, you know. And not only that, I think because of what had happened in the past, especially this year, their valuation had actually gone down to about 20 to 25x on average, you know. So is that still expensive? Honestly speaking, there are some stocks which are already trading below, say, like a 5-year to 10-year historical valuation mean and average. But there are still some that is still trading above. So then you just need to sort of like get into specifics, individual stocks, and really understand their business and their business growth and direction.
Right.
But yes, I I think a lot of people would know that I am personally a big believer in the Bursa tech manufacturing sector. I think if we are talking about medium to long term investment, I think this sector still poses the biggest opportunity for investors in Malaysia, just from the very fact that, you know, they have got huge addressable market because number one, they are
global. Yeah.
They are global, right? So you're exporting and you're getting US dollars, and if you really think about where US dollars against the ringgit
4.48
going to be, I mean, okay, MJ, say in 3 years from today lah, is the dollar ringgit going to be closer to $5 or is it going to be closer to, say, a $3?
Well, if you're looking at the trend, definitely $5. And it's already, I mean, it's already closer to 5 already. I mean, statistically right now. Yeah, but I would caution that I think during 2017, especially this is on the back of all the 1MDB saga and all that, people thought that that's it for the Malaysian ringgit, but it went from 4.4 to 4.15 as a low.
I mean, honestly, we can never say for certain.
Correct.
A lot of things are in play. For instance,
correct.
I mean, we all know that the US government has been abusing the US dollar because of its reserve currency status for the longest time, right? So we all know that, and I mean, the fact of the matter is that they printed like trillions, and that only by right should reduce the value of the US dollar. But again, as compared to that, in Malaysia, maybe things are relatively worse. That's why the currency strength vis-a-vis the US dollars are weaker, you know. A lot of things are into play. But coming back to the tech, sort of like tech stocks in Malaysia, I would like to say that, in the short term, I honestly have no idea where it's going to go because, again, the recession fears, the derating, basically the derating is happening, right? So, but in the long term, there are a lot of things. Medium to long term, there are a lot of things. Just I already mentioned. Basically, the total addressable market is huge, and secondly, is of course the digitalization of everything. And the third one is the automation of everything.
Yeah.
And then we can talk about, just now you mentioned the deglobalization also. So we are seeing a lot of like the tech manufacturing players are really attaching themselves to either China or attaching themselves to either US, right? And Malaysia's positioning on the entire supply chain. That is why we are seeing Penang as like right now becoming like super hot. Like all the MNCs are investing in
A
Penang.
lot of money is flowing in.
Yeah, so I think these are 5 factors of which I'm still bullish on the Malaysian semiconductor and Malaysian tech sector. Again, I repeat, it's digitalization of everything, automation of everything, deglobalization, Malaysia positioning in the supply chain, and basically they have got a big addressable market lah.
Yeah. So, I mean, specifically, I know one company that you're quite interested in. Ironically, it's not Malaysian, but it's AEM, right? Can you share with us a little bit about the 3-point thesis, right, for AEM?
Oh, okay. So AEM is basically a company that I really like. It is both in my short-term and my long-term investment. It's basically an ATE company based in. They have offices all over the world, but factories is in Singapore and Malaysia. There's also a present. And why I like this company is that because, in my opinion, they are a pioneer, they are a leader in what they term as TAS 2.0. You know, we always hear this 2.0, 3.0, right? But basically, in terms of TAS, on basically your semiconductor chips and everything, they have gone and they have sort of like labeled this new thing, which is called system level testing. So of course, you know, you will have your usual burn-in test, you have your final test, and then apparently there is new thing which is called a system level test, because everything is just becoming so micro at the moment and it goes into the systems. So I like this company because, okay, for me, because I'm a finance guy, I look into the valuation and I find it extremely attractive lah. All right, so I think right now it is trading at a sub 10 PE ratio.
And is it net cash?
It is net cash.
Wow. So the actual value, the valuation is probably even lower than that.
Yeah. So if let's say I want to sort of like compare this to all the ATE companies in Malaysia, you know, they are all trading, again, as I mentioned just now, above 20 to 30 times earnings, you know. And if I compare this to, say, their biggest, their global competitors, the likes of your Kohu and your Teradyne and all those, they're also trading at a premium. So in my opinion, I think it is an underdog story. I like the company. I like the management. The management has always been giving guidance on basically what is their revenue for the year, and they have always beat their own guidance. And previously, a lot of people are saying that, you know, we are going to only be able to give them a low valuation is because they are highly related to Intel. Like Intel has been their biggest client for the longest time, right? So now we all know that, one of the other theses, of course, is we all know that Intel is really spending.
70 billion, right? Something.
Yeah,
like that.
So just for info, like AEM provides or manufactures the handlers for Intel. So as Intel increases their capex, you know, that is why you're seeing AEM's revenue keeps going up. But other than that, you know, I think recently in the recent quarter, they did mention that they have closed like 2 new customers. And I have a feeling that these 2 new customers are important players in the semiconductor space. And now it's probably only at the level where it is just a small orders and it's just going to test out. I think it's going to scale, and therefore I think the entire notion of, you know, we can only value you at a certain valuation because of your customer concentration risk should sort of like dissipate over time lah.
Right.
Yeah.
So right. So net cash, sub 10 Intel's customers. And then of course there was the US CHIPS Act where Intel will also get some subsidies.
Yeah.
Right. So okay. So that's enough for tech stocks. Let's ask talk about the juicy stocks right now.
Which juicy stocks?
MyNews, right? So MyNews it's not just a hot stock. It's a hot stock for stock bitters, right? A lot of Stockbit guys that we know personally are really into it, and there's a lot of buzz. And the whole story of MyNews is that they were going to transition into be more CU Mart focused, right?
Yeah.
And it hasn't really turned out. They have not really succeeded, right? And the stock has taken a very big beating. I think it's more than 50%, I want to say, about that. So what is your stance on it? Because I know you do have some opinions on the company.
So I have been following MyNews for a long time because I know that it's a stock that a lot of retailers follow. So I've always I've attempted to ask Mr. Dang Luk to come into Stockbit and give out like a private briefing and all those sort of thing, which actually I think he invited some of us into the usual analyst briefings. So I have been following this stock, and I have seen them progresses over time, from the moment that the first CU had launched, and until the subsequent MCO, and I don't know. I think I followed them for about over a year to a year and a half already. Now I think the fact of the matter is, it was not until the recent quarter that it really got slammed down, but I feel like a lot of people are just not giving it enough credit. I think if, let's say, we are looking into MyNews, there are a few things to take note lah. Number one is that, are you comparing MyNews to Family Mart? All right, because I can tell you right now, even for me personally, if I have both Family Mart or MyNews in front of me, I would personally still go to Family Mart. So it is not about comparing which one is superior, because at the moment I have to say that Family Mart is definitely superior. But when it comes to investing, I think I mentioned just now I've been traveling everywhere, right? Recently, and I can tell you that in every places that we go, convenience stores are convenience stores. There's not only going to be one brand. There is going to be a selective, even easily like 4 to 5 brands, regardless on whichever country that you go to lah. Okay, there's not only just one. There's like several. So now the fact of the matter, then you need to think is, MyNews is not number one, but as number 2 or number 3 or number 4, should they be worth more than whatever the market is valuing them at this current juncture? So on that matter, you again then need to take into consideration a lot of things. Now, the fact of the matter that I understand is that a lot of MyNews investors, when they invest into MyNews, they are not really comparing, like taking things into context. So, for instance, the other day, I just pull out some CTOS of Family Mart, trying to just understand their business, right? And trying to see if there are any apple-to-apple comparison. So I did that, and I posted it on Stockbit. And do you know that Family Mart, on their first 1.5 year of operation, they actually made like a 70 million revenue and a 7 to 8 million loss on their first 1.5 years of operations, and they opened 30 stores apparently. Now, if we compare that to say MyNews and their CU Mart, right? So in the first 1 year, they actually managed to open 100 stores, and you need to also take into context, right? Because when Family Mart was, when they came in, there are a lot of things that, and their 7 million loss doesn't taken into consideration, say, the FPC, the
depreciation, right?
Yeah, the FPC utilization and cost and all that. It doesn't have COVID, okay? It doesn't probably take into consideration all the overheads, because maybe the overheads are being charged at the QL level and not at the Family Mart level in their CTOS report. And what else was there? Yeah, so all these things wasn't there for Family Mart, and they were still loss-making. So even Family Mart, even the best of the best, was not built overnight. So the fact
and they had the cost advantage for their surimis and all that.
Yeah, correct. So the FPC wasn't hit into the subsidiary Sendirian Berhad level, and they were still losing 7 million. And of course, they were first mover advantage. Now of course, CU Mart and MyNews right now, where they are at the moment, they are loss making for sure. But they have got 100 stores, and I think what I just want to say is that I was there on the first CU Mart, which opened in April or May of last year. I was there in the SS15 stores with John.
Yep.
When the SS15 Subang was open post the lockdown, and I can tell you that the food then was actually pretty good. But it's just that CU today, if you go to any CU, the food quality is not there yet. So I think I have a feeling that they are expanding as fast as possible, but they are really sacrificing the quality of food.
Right.
But I also want to say that during the briefing they did mention that they did have labor shortage issue on their kitchen, on their FPC. So that really affected the quality of their food. But fact of the matter is, or long story short, do I think that it is a chronic disease that the management of the company cannot sort of like improve on? I don't think so lah, and I think today MyNews is 300 million market cap or something. Yeah. So can they turn it around? I do think that they can. I think they are probably, the upcoming quarter is still going to be loss making. But I do believe that they're probably 1 or 2 quarters away from finding the right formula than to continue on this sort of like downward path lah. And you also need to take into account that, recently why MyNews share price has gone down a lot is because EPF has been selling.
Yep.
So why was the reason of EPS selling? It could be because of a non-fundamental reason. I was made to understand that during the briefing which I attended in recent MyNews, apparently there wasn't any EPF analysts over there. So maybe they could sell off because maybe MyNews had gone down below a certain mandated market cap, or maybe they just have a global mandate where, we just have to sell everything because we feel like the entire macroeconomic outlook is bad. We need to trim down our position. I don't know. Honestly, I'm not in EPS head.
Guess.
So I think that's where I stand with MyNews lah. In my opinion, I think at this current juncture, they have actually had got about many years of experience of running MyNews. They needed to move into CU because the entire, I would say, ecosystem basically forces them to shift, right? Because MyNews, the old MyNews brand was not going to last because,
there's a place where you get newspapers.
Your newspaper is not going to be there anymore.
Exactly.
Cigarettes are not going to be there anymore. So they do have to move into a business model with the likes of ready-to-eat food like a Family Mart, So that in itself was basically much needed. Of course, there are a lot of mistakes that, that maybe the management did along the way, but I don't think these are chronic mistakes, and I don't think that these are chronic diseases for the company.
I will say this right about MyNews. If it turns around, the price today is very, very cheap.
Yeah.
If it does turn around, even some signs of hope. Then I do believe it's only
because now you have around 100 stores of CU, and that's not even counting all the other MyNews stores, right? And you're trading at about I think it's 300 million market cap today. I need to check. I forgot. So that's like a valuation of about 3 million per CU store. So I don't know. Let's wait and see. Of course, there are still a lot of things which the management have to execute properly. For instance, to really just improve the in-store experiences. Those definitely need to happen, and if they can really execute that, I think CU can actually be number 2 in the Malaysian market, and for them to be a number 2 in the market, or even number 3, I think at that valuation is cheap enough.
Yeah. Okay, that's I expect interesting comments in the comment section about MyNews for sure. But one company that I think this is the latest company that you really talked about, which is Texchem, Sushi King. Who would have thought, right? Yeah. Who would have thought Sushi King were one of the best performing stocks over the past, I think, 2 years? Yeah. I want to say our good friend Mr. Peng Lam, right? Big, huge fans. I believe he used to work there as well. So. What are your thoughts on Texchem, man?
Yeah, so I think Peng Lam actually mentioned about the company public in Stockbit, from, I don't know, end of last year or something when it was below one ringgit lah. So it was insane, like, I mean, of course, I follow him, and I have been making a few rounds, but it has just been stupid trading and small profit sort of like trades. But I think what happened is they recently opened up to the public and to analysts, and I think the story about Texchem is that firstly it's a conglomerate. Yeah, it's a conglomerate, and fact of the matter, when we met the management on the briefings, is that they finally so they hired a CEO that is profit driven. So I think that was the highlight in for me lah, at least, because all this while they have always got management of which the chairman is a very entrepreneurial person, but the CEO this time around is very profit-driven CEO. So, for instance, he takes steps like he will close. He will basically really make the company lean lah. So, I think Texchem of the past, they were hiring about 5,007 to 6,000 staff.
Yeah.
Right now they are about 3,007 to 4,000. So you are really, really cutting it lean and being competitive and profitable. Secondly, I think what is interesting in my opinion was the turnaround in Sushi King. So I think they definitely had learned from their mistakes, the management as a whole. So they closed all these like non-profit Sushi Kings, those that is probably located regionally and all that, because they just didn't understand the market and they just focus on what works in Malaysia. And I think the fact of the matter is that over COVID, I believe one of their biggest competitor or rival was Sake Sushi. So pre-COVID, both of them have got a lot of stores, I think around the region of like 120, 140, if I'm not mistaken, each. But post-COVID, Sushi King has got the same number and even increased a little bit. But apparently, Sake Sushi is now like only have got 4 or 5 stores.
Wait, what?
So right now, basically, Sushi King is your really go-to place for halal Japanese food, and they have got the largest chain of Japanese chain basically in Malaysia, restaurant. So now another thing is a lot of us in KL probably looking into Sushi King, and we are comparing them to like Sushi Tei, Rakuzan, and Sushi Zanmai and all that. But in other areas of Malaysia, like for instance, the management did highlight the most profitable Sushi King is actually in Sandakan, for instance,
No
right?
way.
And they are probably the only sushi joint there or something. And the good thing about being halal sushi chain is you're able to operate in, for instance, states like your Terengganu and your Kelantan,
yeah.
and these are really extremely profitable states lah. So right now, the entire story is that Texchem have got 4 business units. They have got the industrial chemical distribution unit. They have got the polymer engineering unit. Okay, polymer engineering is also another interesting one, but I think I would just ask you to come to Stockbit and read my post and Peng Lam's post. And the third one is they have got their food units. The food unit is also interesting because apparently they are like one of the global leader in soft shell crab farming in Myanmar or something, So just now I think for the tech stocks we mentioned about how you export and then your costs are basically your local talents, you're paying in ringgit and you're exporting and you're getting in US dollars. The same is happening for their food division because they're farming out of Myanmar, and Myanmar apparently have got fresh water and all those things. So they're getting they're exporting everything, right? So they are getting US dollars, and then after that, their costs, and they don't have labor issues because in Myanmar there's plenty of labor and cheap labor, So that's a good thing. And lastly is their restaurant business, which is Sushi King lah. And now that Sushi King is, when it comes to competition, there is literally nobody else like Sushi King that offers. Or rather, not to say nobody else is like Sushi King, but Sushi King is actually the largest Japanese retail halal brand in Malaysia lah.
Right.
They went on to say even that their competition is actually not the Japanese restaurants, but like your KFC and McDonald's and those things.
Mm-hmm.
So
Fair enough.
yeah, and people are looking into the quarter 2 result a little bit too closely, I think, maybe perhaps, but again, those are the time when again, because their market is mainly the Malay market. Those are the Puasa month and all that, so that's why it was seasonally going to be weak lah. So let's see. I did the sum of parts. Calculation. I think I was giving it a very very conservative multiples on each business unit. I think even right now the blended sort of like earnings is around 10 times PE or something. So I think there is. It's still interesting, but I would still want to monitor it over a couple of quarters before putting like big money in, or maybe putting it as a long-term investment.
Right, fair enough. About the other divisions, are they as you can say, are they as exciting as the Sushi King, or maybe even more exciting?
Yeah, I think the good thing is some divisions are very stable. They have been profit making for a long time. Some divisions are getting very interesting, like the food division and the polymer engineering division. I think the polymer engineering division is worth to study because they are actually also riding on this entire, what we mentioned just now, the tech manufacturing bubble in Penang. So worth looking lah. But whatever it is, the important thing is, previously for Texchem, because they are conglomerate, there are some divisions that is making money, some divisions are losing money. So mix match. It was not sexy, it was not interesting for anyone. But right now, because they have streamlined or they have become so lean, like that every single department is actually making money, and it could be sustainable. So let's see lah.
Yeah, indeed. So last company, even after 2 years now, the bus is actually bigger than expected, and that's gloves.
Oh, gloves.
Right.
Okay, here we go.
I know you have some thoughts on gloves, and maybe I'll get your thoughts there first before we move on to Riverstone, right? So it's a company that you're a big fan of course.
Yes.
But in terms of gloves, like what's happening, right? I mean, we have our thoughts. We did our video a while back saying that basically it's or hinting that it's a generational opportunity in some ways. But yeah, what do you think?
So for gloves, I think for those that has followed the thread in Stockbit, it was a thread that opened back in 2020 January or something. So yeah, we have definitely gone through the boom and we have gone through the bust. I think I would like to highlight that as much as I personally make money in 2020 from glove. In 2021, it was one of the biggest loser in my portfolio. I have always thought that that glove would beat the test of time. I think we saw the first round of analysts turning around on glove prediction sometime in end of 2020 to early 2021. That was when we saw the JP Morgan reports, we saw the Macquarie reports, but I always find their reports, it was not based on facts. It was based on guess. But I think those guesses became facts in late of 2021.
I see.
Yeah, that they are finally seeing the entire, what I would call once the vaccine was ready and up, they were seeing overstocking of gloves. They were seeing a reduction in demand. They were seeing some oversupply situation because of China and all those sort of things, and newcomers, right, from Malaysia even. So those things has became a reality. What was originally as gas became a reality, and yeah, basically the glove, or rather the ASP, it lost the test of time, I would say, in that manner lah. And of course, because of that, then I have to take a hit on my portfolio as well, right? So
I just want to thank you because I think it's not common for people to share some of the not so nice times about their portfolio. And
no. I think look, I mean, everybody needs to share the good times and the bad times.
Absolutely.
During bear market, during bull market, everybody is a hero. It's like when bear market, you are finally seeing who's actually been swimming naked lah. But yeah, I mean, continuing to glove. So during that time in November, I do realize, you know what, this thesis of especially the nitrile medical glove, it is actually becoming a commodity, you know, because it's just oversupply situation everywhere. Yeah, so that was the case, and I think, you know, that's why in my glove holdings it has always been just Riverstone. Or I mean, I do have a small Harta Lega position, which is underwater for the longest time. But going into 2022, I have mentioned this a couple of times, even in Stockbit. In my personal opinion, the only investable glove company in Malaysia, you know, or rather, the only investable Malaysian glove company is actually Riverstone. And of course, we went to Riverstone site visit. You know, we take a look at how management is, how they are running the factory, and what makes them different than the rest. You know, and it's purely simply because of their exposure to a niche kind of glove market, which is the clean room gloves. So they have the nitrile medical glove for sure, but at the same time they also have got the clean room glove. So because of the clean room glove, the ASP is not as volatile as the nitrile medical glove. It is one of the reasons why perhaps, you know, when your Supermax and your other companies are like 10x in 2020, maybe Riverstone was only like 4x. Maybe it's not too exciting or whatever, I don't know lah. But now that the tide had shifted, you know, Riverstone become very appealing because basically their clean room gloves, the ASP has maintained, and at the same time, I think the management understood the game. He had been there before, right? So during the good times, he was not overcommitting to a huge expansion, for instance,
or share buybacks.
Yeah. So because he allocates his capital very well, I would say, you know. So because he didn't overcommit on expansion, so right now when the situation goes upside down, you know, he doesn't really have that sort of like underutilization, and therefore his cost is not as high as the others for keeping things idle, basically, right? So. And I also like the fact that, you know, he was not rushed into making decisions on whether to do a share buyback or to do a special dividend, you know. And he did it in a very sort of like timely manner lah. You know, when the stock market was really pressured, then he just announced the dividend, and you know, by that time the yield was like insane amount. So that got the market really excited, and it recovered, and it got a lot of attention. So yeah, long story short, I think this quarter 2, Riverstone is actually the most profitable glove makers in the world, and this beats Harta Lega, it beats Sri Trang, and I mean Top Glove. Yeah, that one will come soon, and you will see. But yeah, I do think that they are definitely one of the most resilient glove company.
Our analyst group at FIRL, we call Top Glove Top G, you know.
Actually, Top Glove reminds me of Manchester United. I know you're a Manchester United fan, but yeah,
we are above Liverpool as of this recording.
Yeah, I mean, look, the fact of the matter, why I say that, right, is because I think you put it very well in your video, in a sense that is that term again, right? Allocation of capital. Allocation of capital is very important, and I think that is probably one of the biggest downfall of Top Glove, because I'm not sure for whatever reason, but you know, they did share buybacks and they did special dividends. It's as if it is to please someone else. Like, I don't know.
I thought it was showmanship in a way, where, you know, I'm bullish on my company, so I'm doing buybacks. I mean, it's not like how like Buffett does buybacks, right? Like he buys back if essentially the company is undervalued.
Yeah. So why I say it's very similar to Manchester United is because, in my opinion, you know, Manchester United management they're very, I would say, they go along with the flow, like with whatever the fans want. The fans want signing of Cristiano Ronaldo, they make it happen. They don't really have like their own strong judgments on this and on that. So that's where I think it is. I may be wrong, of course, but yeah.
No, if you look at it from a recruitment perspective, absolutely correct. But if you think about it from an investment perspective, they've only spent 300 million of their own money, and if they were to get bought out for United, but okay, wait, before that, right? I'll run the math for you. I know it's a small diagram, but it's related, right? Because there's this website, there's this Twitter account called Swiss Ramble. I think you follow him, right?
I follow him, of course.
Yeah, so he should say that, first of all, they took out like 130 over million dividends. And they also, when they listed the company, they got paid. And then they paid themselves salaries as well. So before even selling the company, they've already got back 2-3 times the capital already that their father put in, right? Joel Glazer, I think. And then if they are about to be acquired, we know that it's going to be north of 5 billion because Chelsea was bought for 4.25, 4.5 billion. So United, we at least, like worst case is 5 billion, 5.5, somewhere there. Yeah. So from their perspective, investment, right? They've done they're not top glove lah. Let me put it that way. But the recruitment, yes, the recruitment is very top glove like.
Yeah, I think we are talking about the management of the business here. Yeah. I think what any businesses should do is to do something like more of an Arsenal and less of a Manchester United.
Yeah, actually, you know what?
Because Arsenal at this point of juncture is like whatever crap that has been thrown at them and the management because of their losses and where they were and how much they became like a laughing stock of the football community, right? They stuck their guns on the person that they believe is going to turn around the company, and they came up with like a blueprint on what they're going to do in the transfers. They're going to only buy young players, right? And they stick by what they believe throughout all the tragedies. And now it's paying out.
Do you think that then Arsenal fans it was very unfair how they treated Arsene Wenger?
Yes.
Really, yeah.
I think we have, and myself included, we have been ping-ponging whether we are Arteta in, Arteta out, and
really, yeah,
whether or not this.
Because if I'm Arsenal, I'm Arteta in, right?
I mean, it's easy for you to say right now, but when you are bottom of the table last year and all that, and every single time you are losing to lousy competitor, also, then you feel like he's just not cutting it, like he's too young and all that. But I think long story short. Stick by the manager, stick to your principles, stick to what you believe in, and have a blueprint on how you want to turn around the company.
But I mean, it was really difficult for Arsenal because I think the key thing was the stadium, right? It was Emirates, and I think it was 2007.
Yeah.
You shifted into the Emirates, and as a result, you had to sell that 2008 second place team, essentially all the top players, right? From Fabregas.
That's the old Arsenal. I'm just talking about the current situation of the past, say, 2 to 3 years of Arsenal against Manchester United.
No, but I mean, going back to the Arsene Wenger thing, right? I think where I felt it was harsh on Arsene Wenger was because, he had to see all his star players go for the financial security, which then now, 10 years later, give or take, you are seeing the rewards.
Yeah, we'll see because by right, the owner's supposed to take charge by then, right? But anyway, that's coming back to the topic of gloves.
Yes,
I've always felt that in 2022 the only investable glove maker is Riverstone.
Right.
But as of today, what has happened is we have seen the Harta Lega and we have seen Riverstone's briefing of late. The fact of the matter is the situation hasn't improved. Like people are. The business owners of gloves, they have said that the oversupply situation should improve by this time, and then after that they keep delaying the time, right? So I think that's where we are at the moment. I think the massive sell-off in Harta Lega recently, and glove stocks in general is right now is basically trying to price in sequential quarterly reduction all the way until Q4 of this year. If it is again beyond that, maybe you will have another round of sell-off. I'm not sure, but that's basically where we are at the moment. Now the thing is, okay, so now that the price is like this, should I invest for the long term? I think that is a question on what everyone think the industry is going to look like, say, in a normalized period, because we all know that right now it is not really normalized yet. Like it's not yet at equilibrium. So let's just say the question number one is, when do you think that the industry is going to go into equilibrium? And I'm talking specifically on nitrile medical glove. So is it going to be 2023, 2024? And during that time, what do you think is going to be the ASP, and what is going to be the margin like, And I think where it is also important also is that where is Malaysia as a percentage of the market global leadership position in the world? Pre-COVID was 75%. Post-COVID, is it going to be 75% or is it going to be less because of Inco and the blue sales and all these sort of Chinese competitors and Thailand competitors? If it is going to be less than, say, 75, say it's a 50%, then can you actually attach historical valuation to the valuation of normalized time in the future? I think that's where I would say, people should think about glove lah. But I just want to emphasize that, in my opinion, if we are going to invest in glove, just try and stick to the best of the best. And in my opinion, the best of the best is Harta Lega for the top four. Just because they have got the history and they have the track record that, they have been running it very well. And yeah, basically you really need to understand to withstand this particular down cycle lah. Yeah.
Fair enough.
I think where it may get interesting is that when you start seeing, and we are already start seeing, if you go to businessforsale.com or something like that, you already start seeing some glove companies that are up for sale already.
That's crazy.
Yeah. So I think the smaller ones, once they start selling out to bigger ones and all that, I think you are starting to see the consolidation. Yeah.
Interesting. Yeah, but I think what for me at least, we really reviewed who is level-headed and who isn't in this downturn. Yeah.
And I also want to sort of like highlight this point as well, that I think that the risk is also trying to understand what is China glove makers' goal, because it is very difficult to understand what their goal is. Like, what is their goal? Are they trying to really take over market share? How much losses can they take in? I think an important fact that we know is that Inco has got the strongest balance sheet when it comes to the amount of cash inside their balance sheet lah. But of course, in my opinion, they also have got the highest burn rate. So how much more quarters of, say, losses can they take in? Last quarter it was not loss making, but I don't know about this quarter. I think the result is going to come out soon. But yeah, if this quarter is a loss, then how much more losses can they take in? So I think, and what is basically their goal? Like, I have no idea. Like, does the government actually tell them, I don't care if you're loss making, you just have to keep producing and you have to keep expanding your glove capacity? I have no idea. If that's the case, right, then I don't know what's going to be the industry dynamics in the future lah.
Yeah, it's not sometimes it's a too hard power, right?
Yeah.
Of course, it's a too hard power.
But I think, Harta Lega now at 1.6, 1.7, it's pretty interesting already lah, the share price.
Fair enough. Okay, before we end, there's actually an exciting announcement, right? That yourself and Stockbit wants to make.
Yes, I think I just want to share with everyone again just one more place to take a look, when it comes to your investment. And I think we did mention it earlier about oil prices. I do still think that oil price in the future, or rather going closer to winter, is going to be higher. So I think it is an interesting space to take a look at the midstream oil and gas players. I do have some positions over there, I think in Malaysia, in Bursa, you can take a look at the likes of like, Coastal Contracts and Wasyong and even Yinsen. And I think if, let's say, we're talking about globally, I think you can take a look at what John, the company that John has always had high regards for, like Schlumberger and all those companies. Because I don't know what's the term, but there is basically the gold mine, and there are like people that actually rents out the gold helmet and the gold diggers and everything. So I think the midstream oil and gas players in this quarter, we are already starting to see that they are printing like very good profits. So I have a feeling that from this quarter onwards, they will continue to print very good profits. And I don't know if you saw last week, right, MJ, or even this week, like Saudi Aramco.
Oh yeah, the profits, right?
Yeah, their profits like
bigger than Tesla,
48 billion, right?
Apple, right? Combined.
That's like the largest ever earnings in the history of
earnings.
It's as you mentioned, it's bigger than like a Microsoft and Google and I don't know.
If they annualize their earnings, they will nearly be Malaysia KLCI's market cap.
Serious,
because 50 billion, right? So 200 billion. Our market cap is something like I want to say 250, 1 trillion ringgit. So yeah, one year would be matching Malaysia's market cap.
Yeah, it's amazing, and what they are doing with the money is basically they are coming back and
giving
investing.
It to Masayoshi Son.
Yeah, and I think they're still
SoftBank.
investing in some of the great stocks of the world. So, I mean, I guess to wrap up, I mean, I don't really want to be too downbeat, but because I am actually an optimist, I still think that in the long term, say, I don't know, 3 years, 5 years after this entire saga is over, I think you should still continue investing. I am still investing every month on some stocks which are in my long-term portfolio, right? Like your Tesla, like the AEM just now we mentioned. In Malaysia, I think people know that I really like Mega First and DNO, for instance, and PMB Tech. So I am still investing in those wealth portfolio for the long term. Just sort of like, look at, okay, for long-term investment, I think it's important. It's not about timing the market, but it's about what you invest in. So you need to really, really understand the company of which you're investing in and understand that you believe that they are going to be able to recoup whatever capital that you're pouring in at the moment. And yeah, I think you should be okay. If I can just share my, I think just now, you asked me to share a little bit about my business venture.
Yes.
Even in my business venture, so yeah, I mean, in the stock market, I think this one we mentioned in the first podcast that I did with FIRL. There are always two lines. One is basically the business, and one is basically the share price, right? So the business has always or should always be on an upward trajectory, the businesses that you invest for the long term. The share price might goes up and down between the linearity of the upward curve. Sometimes it can be above the line, then it's a little bit overvalued for that particular period of time. Sometimes it's below, then you can actually buy it so that it's, it goes back to the
average price line.
To the linearity of the fair value of the business development, And coming back, I just want to share, even for the small business that I was doing, we are facing all these challenges as well. All our cost price, like the plastic resins and the labor market is all going up. But year on year, we keep sort of we keep working hard, and we do more sales, and we are taking away market share. So in terms of business progression, it is on the upward curve lah. And I think this is what you need to look at when it comes to long-term investment. Share price is one thing, but I think the business fundamentals and where the business is going to go is another thing.
Very good. Very good. Yes. So now we leave the best part to the last, which is some updates, right, from Stockbit. Very exciting.
Oh yeah. I think that one I'll leave it to the team to announce. But I think some interesting, right? Some interesting updates should be coming up for Stockbit. We have been around. I think everyone knows. Everyone can download the app, and everyone can follow us on our social media. We've been around, man. Even during this down market, our content is still going up. Yeah.
Actually, there's one more thing we forgot, which is your your ventures into private equity, right?
Oh yeah.
There's something that you wanted to talk about.
I think not so much lah, but I just feel that because I do invest in some startups companies, so I do see the market from that part of the coin as well, and I do feel that for private equity space at the moment it is very interesting time for them, I think, because here we have got a bunch of companies that is finally trading at a healthy valuation level, for instance, and they have got like a lot of dry powder to invest in the best companies and the best management lah. Yeah, I think maybe that's what I can share at the moment. If let's say you're looking for alternate investments,
Right.
What
are your discoveries, I guess, like tips? I mean, of course, you're a lot more familiar with the public space, but then going to the private space, what are some of the things that you've learned about yourself and also how to be a better investor in this space?
Yeah, I think a lot of people feel that maybe a lot of people always, especially investors in the public market, they feel like they're only sort of like I would say food is whatever is provided in the public space. But I think we shouldn't just think that is that. Yeah, I know you couldn't make into some of the visits that I and John made.
Yep.
But we actually have been going around and talk to private companies and just try to understand their businesses and see whether there is any opportunities to invest in them and all this sort of thing lah. And even for public markets, actually a lot of the public limited companies in Malaysia are now starting to open up ever since whatever had happened in COVID period. A lot of companies are actually starting to be a lot more transparent, and they are a lot more open to say a factory visits and all that. You can just drop them an email into their IR and ask for a visit and just talk to the management, understand their business better. I think during the downturn, as much as maybe sometimes the best thing to do is to do nothing. But if let's say there is other things to do, for instance, to really understand businesses, by all means, go and do it, man.
Fair enough. All right, man. As always, a pleasure speaking to you.
Yeah, so sorry, I don't know how long it's
dragged. No, it's we are pretty much on time, But yeah, thank you so much for coming on. Really looking forward to that Stockbit announcement.
Yep.
Still very tight-lipped, but I understand why, because it's big news.
Yeah.
And guys, hope you enjoy this particular pod and you like, this sort of content. Go. Check out all our other podcasts. We are also on Spotify. And, I will, thank you for coming on. And we will see you guys when we see you guys.